Yeah, good morning, everyone. So, US market saw some mixed reactions. Uh, Futures are positive, mainly driven by Alphabet results, which came post-market and was up by around 5-6% post-market. So, this being a very busy quarter in the US with a lot of tech company announcing the results, market will be influenced by that. And as such, we are seeing the market being volatile over there. Asian markets are seeing some softness today morning. Most of the markets are bit down. And what we are seeing that commodity also are more of a flattish to marginally up. Oil is flat, whereas iron ore and steels are also up by 0.5 and flat respectively. So nothing great reactions in the international market, some softness somewhere, and uh, uh, commodities are also more of a flattish. So we see today being in the Asia, in India also, we may see uh, some range bound trade ahead of tomorrow expiry. So nothing so great expected, means remain range bound in today's trade. Now request technical team to take up from here.
Thank you. A very good morning, all of you. So we have seen some strong rally in Nifty in yesterday's trading session. Nifty has given a good and a very strong closing. The only thing to watch out here is Nifty has taken the resistance of its downward sloping trend line. For today, we're expecting a flattish node, expecting a range bound move in today's trading session. If Nifty continues to take the resistance of the downward sloping trend line, then we can expect some profit booking here again by keeping, and Nifty will have an immediate support at 24,400. If that is broken, then we can expect 24,330 to 24,250 levels on the downside. Whereas if the trend line is broken, Nifty continues to trade higher side, then 24,540 will act as a very important resistance zone, followed by 24,640, which is the 100-day moving average from where we have seen a very strong fall. So these two are the important resistance point for Nifty. Talking about Bank Nifty has shown a phenomenal move in yesterday's trading session. It is a totally a bullish day in Bank Nifty yesterday. Bank Nifty has broken its 100-day moving average 20 and 50 in a single day, and it has closed above that. So, which is a very positive sign for Bank Nifty. After such rally, if we see some pressure in Nifty, we can expect some profit booking in Bank Nifty as well. So, if that is broken, then 52,000 will act as a very important support zone for Bank Nifty, followed by 51,740 and 51,500. If then whereas the upside resistance for Bank Nifty is currently placed at 52,540, followed by 52,770. Talking about Fin Nifty, closed at around 24,355. It has even it has in some good move in yesterday's trading session. The immediate resistance for this index is at 24,440, followed by 24,550. Whereas the downside support for this index is at 24,200, followed by 24,000. Well, stocks are looking good at current levels. Wipro is looking good at current levels. Can be bought for a target of 580 by keeping a strict stop loss of 550. Mahabank is looking good at current level. Can be bought for a target of 56 by keeping a strict stop loss of 4850. That's all from my side. I request Nirav to take the call forward.
Thank you, Ayush. On the derivative front, see the overall data is positive, and very likely we might see another bounce after the initial hiccup. We expect Nifty to break about 24,500 levels soon. Once that happens, we will see Nifty coming up toward 24,800 to 25,000 levels, which is where it should reach in the next few days. Open interest is now at comfortable levels. PCR has come up above 1. The VIX is still below the 15 level. So all in all, the data is positive. Nothing to worry there. We have seen the last couple of days on the put side, a lot of additions from 24,500 to 24,000 strikes, which augurs well. It also tells us that people are selling puts, and they are confident that the market can come up. From the stock specific front, At this point, most of the sectors yesterday saw good upward rally. As I said yesterday, banking came up, good short covering rally happened. Also, we saw a lot of selling in the auto sector. So some shorts still built in the auto sector. Some more selling can come in there. However, we see good buying action now in the pharma and IT space. So probably in the next couple of trading sessions, you can see pharma and IT move up going ahead. So look out for the same. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. Yesterday there was a con call of Sumitomo Chemical India Limited, where we had seen the result was marginally above expectations. During the quarter, domestic revenue was down by around 4%, while export revenue has led the growth with 160% growth in the revenue. Gross margins also improved by 421 basis points on a YY basis. In the con call, the management highlighted key growth drivers such as improved fundamentals for the upcoming Rabi season in the second half, expected higher growth in its new product launches, and improved scenario for the export volumes. Also, it indicated stable input cost and with near to zero risk of decline in further selling prices. In terms of guidance, it all aims to sustain the annual EBITDA guidance in the range of 18 to 20%, and it expects the Bhavnagar plant to reach the full production and commercialization this year. We are positive on the stock, where the stock is currently trading at 40 times to FY26 EPS. Sudarshan Chemical Industries had also a con call yesterday. The management indicated confidence on the pigment business, where customer centricity has played the role. It is not expecting any major capex over the next 3 years. It has observed a good traction for the new products which are already in the market, and the capex what it has already incurred is going to be driving the growth in the future. It is gaining the market share in the coating and plastic segments, which is $3.5 billion global market. And general headwinds in the industry had become favorable for the Sudarshan in the exports markets. In terms of guidance, the company is guiding incremental revenue of 1,500 crore over the next 3 to 4 years from its capex of rupees 750 crore, which was announced prior 18 months. And second half of FY25 growth would be similar to the average growth in the past few quarters. So we are long-term positive on the stock, where the stock is currently trading at FY26 time to FY26 earnings. On the result front, there are a couple of key chemical companies have posted the results, and we will provide the outlook post the con call. PCBL posted the results marginally above expectations. Revenue grew by 46% on a YY basis, and EBITDA margin reported at 17%. In terms of volumes, exports has seen higher growth of 22% versus 10% in domestic. Overall volume growth stood at 14%. In the investor presentation, it has announced of the JV agreement to form Nova Nanowaste Technologies Limited for developing nanosilicon products for lithium-ion batteries, where it will hold 51% stake, and Kindia will hold 49% stake. For the same, it is setting up a pilot plant to produce the larger quantities of battery and EV manufacturers, and which will be followed by a full-scale plant. The stock is currently trading at 21 times to FY26 EPS. Lakshmi Organic Industries posted the results broadly in line with expectations. Revenue grew by 18% on a YY basis, and EBITDA margin reported at 9.7% versus the expectation of 9.9%. Bluejet Healthcare posted the result below expectations. Revenue grew by 15% on a YY basis, and EBITDA margin reported at 33.4%. The stock is trading at 33 times to FY26 EPS. On the consumer side, Marico Limited posted the results broadly in line with expectations. Revenue grew by 7% on a YY basis. and EBITDA margin reported at 19.6%. Company's domestic revenue increased by 8% along with the volume of 5% growth. Parachute Coconut Oil posted the volume growth of 4%, and VAHO has declined by 8% in value terms. The food segment has grew by 28% in value terms. International business has seen the growth of 13% in CC terms, and Bangladesh has seen the growth. Also, MENA region continued to report the strong growth. It has seen a slight increase in the operating expenses with 30 to 40 basis points, where advertising and promotional expenses were flat. The management has guided for the higher volume growth in the subsequent quarters and is targeting double-digit sales growth for FY25 and maintaining its EBITDA margin for the full year of FY24 levels in FY25. So we are structurally positive on this stock from long-term perspective. However, we believe there is a limited upside at current valuation of 44 times to FY26 earnings. On the IPO front, Godavari Biorefineries Limited is listing today, and we had recommended neutral on the issue. The price band at upper end was set at rupees 352. The issue size was rupees 555 crore, which includes the offer for sale worth rupees 230 crore and the fresh issue worth rupees 325 crore. The proceeds from the issue to be utilized for the repayment of debt worth rupees 240 crore. The company is incorporated in 1939 and demerged to Godavari Biorefineries in 2009. It is one of the largest producers of ethanol and pioneer in manufacture of alcohol-based chemicals in India. If we look at the valuation, if we look at the fundamentals of the company, it has delivered the weak performance over the last few years in terms of revenue growth and also in terms of the return ratios. Revenue grew flat between FY22 to FY24. And if we look at the ROE and ROC for FY24, it stood at 4.7% and 9.5% respectively, which are lowest in the industry. The issue is valued at expensive valuation of 17 times EV by EBITDA when compared with the listed peers. Thus, we had recommended neutral to the issue. Thank you.
Good morning. Maruti Suzuki India posted the result below expectations. Revenue from operations grew by 4.7% quarter on quarter and 0.4% year on year. EBITDA declined by 7.7% year on year. EBITDA margin came at 11.9% versus expectations of 12.7%. PAT is also below expectations. We have also attended Maruti Suzuki con call. So company expects retail sales growth of 14% during the festive period, like Shraddha to Diwali, compared to the same period last year. But overall, company expects 3 to 4% retail sales growth for FY25. Company will launch a new high EV SUV in Jan 2025, aiming for high range and competitive cost of ownership. Domestic demand, particularly for entry-level small cars, remains sluggish. Although rural sales have shown growth, urban demand remains weak, potentially impacting overall sales volume. The small car segment, traditionally a stronghold for Maruti Suzuki, but now faces affordability challenges. However, potential demand rebound is anticipated by FY26. Company acquired Suzuki Motor Gujarat Private Limited to make it 100% subsidiary. So the overall outlook for Maruti Suzuki is long-term positive. Thank you.
Good morning, everyone. So yesterday, APL Apollo came up with the results. The results were below expectations. Revenue was down 4% sequentially, and it was up 3.1% year on year. EBITDA was way down sequentially by 54.2% and 50 quarter on quarter and 57.5% year on year. EBITDA margins were also down at 2.9% versus expectation of 4.8%. Quarter on quarter, it was 6.1%. Adjusted PAT was at 53.8 crores versus expectation of 144.1 crores. We also attended the con call of APL Apollo. The sales volume came at 0.758 million ton, grew 5% quarter on quarter, 12% year on year. Company achieved this highest ever quarterly sales volume during the quarter because it gained market share against low grade sponge iron patra pipes. And realizations came at 62,980. It was down 8.71% quarter on quarter and down 8.19% year on year. Realizations were down on account of lower steel prices. EBITDA per ton came at 1,821.90, down 56.45% quarter on quarter and 62.16% year on year. EBITDA per ton was down so sharply because of lower realization and inventory losses faced during the quarter. Company has maintained its full year FY25 sales volume guidance at 3.2 million ton, and company is confident of achieving the same. Company has launched innovative new product during the quarter for solar industry, and solar industry could be a key growth vertical for the company going forward. Company has also given the following guidance in terms of sales volume for FY26. It is aiming at 4 million ton. For FY27, it is aiming for 5 million ton. And company will be achieving EBITDA per ton of 4,000 to 5,000 in the first phase during the next 2 to 3 quarters. And in the second phase of rupees 5,000 to 6,000 per ton in FY26 and throughout FY26. Company will be focusing on better EBITDA margins going forward along with increasing volumes. And company expects demand to be good and robust going forward. As well as company is seeing pickup in government capex in October, and it also expects government capex to gain momentum throughout the entire of FY25 and FY26. Company has also rolled back the discounts which were given to dealers in October, which will aid the margins going forward. The stock is currently trading at EV to EBITDA of 21 times FY26 EBITDA. As far as the outlook is concerned, we think that the tailwinds for the company, all the tailwinds for the company exists as of now. Focus clearly remains on delivery and execution. And as the results were below expectations, we are currently neutral on the stock. Thank you.
Yeah. HCC reported numbers apparently looks quite positive, but there is a one-off gain of some award which company has received. The benefit of same is around 30-40 crores. So excluding that, results is in line. Hitachi Energy has reported very strong numbers, and also the order book has also increased. Revenue has grown by around 26% and 17% year on year and quarter on quarter. EBITDA margin has shown strong improvement to 7.1% versus last quarter 3.6% and last year 5.3%. But the stock is comparatively very expensively priced at around 300 times trailing price to earning ratios. Allied Blenders has reported good numbers. Numbers have shown improvement on the margin front, though the revenue front, it remained more of a flattish at around 2% year on year growth. The margin has improved to 11.9% versus last quarter 9.8% and last year 8.4%. This is mainly driven by the higher sale of premium products and also higher sale in the high margin states and also lower packaging cost. So that all has resulted into positive growth in profitability. Company is introducing various new products. One they had is introduced is a vodka in operation company. So all these are expected to drive the growth. So the stock is trading somewhere at around 33 time EV by EBITDA, which is lower than Radico Khaitan and even United Spirit, but marginally higher than Titagarh Wagon. So outlook is long-term positive for the company. That's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting gold prices to test the support area at 79 200 to 79 100, and from there one should expect prices to bounce back. So buying with a stop loss of 78 850 is recommended, and on upside again 79 500 700 is the target where one should book profits. And in silver also, we are expecting prices to take the support area around 98 200 to 98,000, and one should buy with a stop loss of 97 500. On upside again 99 500 99 800 is the level where one should take profits. Crude oil, we are expecting a pullback till 57 50 57.80. So buy with a stop loss of 56.25. And in natural gas also, we are expecting prices to test 248 250. So buying around 240 is recommended with a stop loss of 234. And in metals, buy copper, one can buy around 842 with a stop loss of 837. And again on upside 850 52 is the target we are eyeing for. In zinc also, one can initiate a buy with a stop loss of 286. On upside though, prices are resisting 290 291, so one can book profits around those levels. That's it from us. Thank you very much.